Hi guys, this is Richard from the Stable Center, and today I'll be covering Chainlink. Full disclosure, I do own Chainlink, but nothing I say in this video is financial advice. Anyway, today we'll start things off with some big news in the cryptocurrency blockchain adoption and end the video off with comparing my two largest altcoin positions, Chainlink versus XRP. Anyway, Chainlink just teamed up with Fortune 500 giant Intercontinental Exchange, ICE, the company behind the New York Stock Exchange, to bring real-time forex markets and precious metals data on chain. ICE's consolidated feed pulls market data from over 300 global exchanges and will now power Chainlink data streams, giving 2,000 decentralized applications and major financial institutions the market info they need to run in tokenized environments. ICE says this will give on-chain markets the same reliability and transparency as traditional markets, whilst Chainlink calls it a step towards a unified global on-chain financial system, paving the way for the tokenization of trillions of dollars in assets. This partnership is obviously a huge step in merging traditional finance with the blockchain ecosystem. So let's start the Chainlink analysis off with some risk and regression analysis. So if you take a look at the right-hand side of your screen, you can see various risk levels. The colder colors, like blue and green, represent times of low risk, which are the best times to purchase Chainlink, and the warmer colors, like orange and red, represent times of high risk, which are the best times to sell Chainlink. So with Chainlink pumping to almost $23 over the past few days, Chainlink's risk level has risen to 0.05, which means that buying Chainlink today is still considered low risk, not financial advice. Remember, we want to be buying Chainlink during these pink and blue risk levels and selling Chainlink during the yellow, orange, and red risk levels. So to illustrate this point more clearly, let's turn off most of the risk levels except the warmer color high risk levels. So that leaves only the yellow, orange, and red dots on the screen. And you can see that when Chainlink tends to overheat, you only have a few days to a few weeks to sell your Chainlink position before the bear market begins. Back in April and May of 2021, you only those few weeks between April and May to sell your Chainlink bags before the 90% bear market crash began. Same story with 2018. You only had a few days and weeks in January of 2018 to sell your Chainlink bags before the 90% bear market crash began. The purpose of me showing you risk analysis every video is to illustrate the point that when the bull market top eventually comes, you will only have a few days to a few weeks to take profits and sell your bags. So don't be that guy that starts acting complacent and daydreams about Lamborghinis and Ferraris when Chainlink is printing a big red warning high risk level. Because no matter how great the fundamentals are and how great the news is at the top, you do not want to be that guy left holding the bag at the very top. Luckily for all of us Chainlink holders, Chainlink is still printing a pink risk level, so we had a long way to go for the rest of this Chainlink bull market. So in other news, the stablecoin market cap just hit a record breaking $270.3 billion, adding over $3 billion in just the past week. So USDT remains king with 61% market share, whilst USDC dominates decentralized finance activity. In the past 30 days alone, stablecoin transactions totaled $2.7 trillion, matching Visa's volume and dwarfing PayPal across 42.8 million active addresses on Ethereum, Tron, BNB Chain, Solana, Base, and Arbitrum. Regulatory tailwinds like the U.S. Genius Act and the SEC classifying some USD-backed stablecoins as cash equivalents are now boosting institutional confidence. Tron now handles over half of global USDT supply thanks to cheap, fast transfers, whilst Ethereum leads in decentralized finance with $137 billion in total value locked. Rising platforms like Base and Solana are gaining ground, and newer stablecoins like USDE and USDF are exploding in supply, signaling that stablecoins aren't just growing, they are now becoming a cornerstone of global finance. So let's actually move over to TradingView and into the Wyckoff analysis. So Chainlink is finally showing signs of life, breaking out of Wyckoff accumulation. As you can see on screen, the second LPS, which stands for last point of supply, bottomed in August of 2024 inside the blue Fibonacci retracement support area between the 0.618 and 0.786 Fibonacci levels. A last point of supply occurs when market makers absorb whatever supply is left on the market before the eventual breakout to the upside. Also, the third LPS also appears to have bottomed inside the blue Fibonacci retracement support area as well, once again between the 0.618 and 0.786 Fibonacci levels. So the first bull market price target for Chainlink is at the 1.618 Fibonacci level at $60. I'd be pretty pissed if Chainlink topped out at $60, to be completely honest with you, because that would be an utter failure of a bull market for Chainlink. Briefly breaking above the previous cycle's all-time high is an absolute joke. But putting my emotions aside, remember the white 1.618 Fibonacci retracement caught the 2023 bear market low. Let me draw that one more time. Yeah, as you can see, the 1.618 Fibonacci retracement caught the bear market low. So because the 1.618 Fibonacci retracement caught the bear market low, it stands to reason that the same white 1.618 Fibonacci retracement might actually catch the bull market top. The next potential price targets are the 1.236 to 1.382 Fibonacci levels, which span between $92 and $131. If Chainlink blasts past those levels, the next potential price targets are the 1.618 to 1.786 Fibonacci retracement levels, all the way up anywhere between $230 and $342. And if we get super lucky, we can hit the 2.272 to 2.414 Fibonacci retracement levels located anywhere between $1,000 and $1,500. I'd honestly get down on one knee and propose to Sergey Nazarov if Chainlink hit anywhere close to $1,000. So let's actually move into the short-term analysis. So over the past few videos, we talked about how Chainlink was most likely going to find a bottom near the white 1-to-1 trend-based fib extension, as well as the 200 daily moving average in red, And Chainlink did indeed do just that and had an enormous pump to the upside. Over the past 48 hours, Chainlink has experienced a small dip, but we are simply retesting previous resistance, which should act as support. Remember, in order for us to continue to have a bullish continuation in the short term, price must hold above the white 1-to-1 to 1 to 1.13 trend-based fib extension levels located between $19.46 to $20.98. If Chainlink can hold above $19.46 to $20.98, that will open the doors for Chainlink to pump to the next white 1.618 trend-based fib extension level located at $27.80. Okay, so let's end this video off by comparing my two largest altcoin positions, Chainlink and XRP. So this chart represents the XRP against Chainlink valuation. In other words, today, one XRP is worth 0.14 Chainlink. Now, I am not going to predict the long-term value of this chart. I am simply going to predict what is going to happen for the rest of this bull market. As you can see on screen, the XRP against Chainlink valuation formed a double top at the white 1.618 trend-based fib extension, which is a perfect Fibonacci ratio for a bearish reversal. Also, if we turn on the market cipher B indicator, we can see bearish divergences on both the momentum waves and the money flow waves. The momentum waves are the waves in blue, and the money flow waves are the green and red waves. As you can see, as the XRP against Chainlink valuation made a higher high, both the money flow and momentum waves actually made a lower high, which is bearish. So for the foreseeable future, I continue to see weakness in the XRP against Chainlink valuation, and I expect Chainlink to outperform XRP. And eventually, the XRP against Chainlink valuation should drop down to 0.1, which represents roughly a 28% drop from current prices. At 0.1 lies the 2025 yearly open, as well as the blue 0.382 Fibonacci retracement level. Also, we can see that the 200 weekly moving average in red is curling up slowly to the 0.1 level as well. So if and when the XRP against Chainlink valuation hits 0.1, I do expect XRP to take back the reins from Chainlink. But we will cross that road when we get there. As for my personal investments, I am not selling XRP for Chainlink. Chainlink and XRP will continue to remain my largest altcoin bags for the rest of this bull market. All right, that's all I got for this video. Thank you guys so much for watching, and I'll see you guys in the next one. Take care.